It's now been 6 months since a major structural low was made in February 2026, and that low is still holding, unchallenged and unbroken. Is this Monero showing strength, or is it setting up for a fall? In this Monero swing trading analysis, we break down Monero's market structure and identify the critical Fibonacci support and resistance levels you need to be watching for its next market move. While the rest of the crypto market has been breaking into fresh yearly lows, Monero has quietly been going up. And when you see how buyers continued to defend key support levels, it's no surprise that Monero is pushing higher. Let's set the stage first. The 2026 yearly high came in on 14th January at $795.71. Most cryptos made their 2026 yearly highs in mid-January, but the difference in Monero's case was the extent of the drop. The severity of the decline saw Monero's price plummet almost in a straight line to a low of $279.22 on 6th February. From this low, it was easy to assume that after a short rally, the market would continue its decline and eventually take out that February low. But no. Buyers stepped in and were prepared to defend it, despite further attempts to push lower. The 6th February low has now become the anchor defining Monero's market structure. For 6 months, buyers have held sellers back from printing any close lower than the 6th February low, and the swing structure is telling the story. Here's where the swing structure gets more interesting. It's not just the February low doing the heavy lifting anymore. We had already calculated 2 Fibonacci zones, one between $305.49 and a slightly lower support zone between $296.88 and $297.14. These zones have done a good job of holding the market up as buyers stepped in twice to defend the June lows, once on 7th June and again on 25th June, forming a solid support base. Upside confirmation was given when new higher lows were formed on 1st July and 9th July. The market structure was making a firm declaration that it wasn't prepared to go lower, and buyers were willing to step up. The 1st and 9th July lows, combined with the 2026 anchored VWAP, have since helped Monero springboard higher. A steady staircase of higher lows from 6th February, 7th June, 25th June, and then 1st and 9th July was telling us that sellers, for now, had lost control. But what is this current rally doing for market structure? The answer is not a lot. Taking a closer look at Monero's position, it is most definitely still trapped within February's extended range. Although buyers have been able to defend the Fibonacci floor, they haven't been able to punch through any significant resistance above. That's not a strong market. That's a market pinned inside a defined trading range. On the upside, the Fibonacci structure still has real work ahead before anyone can call this a trend reversal. The first hurdle is reclaiming the June high at $407.39. Past that is the May high at $436.55. If it can get through that, our calculated Fibonacci resistance zone sits between $448.11 and $449.21. But even that falls short of breaking the key level, the first February high at $494.17. Until that level breaks higher, sellers still own the bigger trend. The Fibonacci lows are holding, but the Fibonacci highs are nowhere near being reclaimed. There's also the Bitcoin question hanging over this entire Fibonacci picture. Bitcoin dominance remains an important factor because when Bitcoin moves sharply, most of the broader crypto market eventually reacts. If Bitcoin manages one more flush to new yearly lows, does Monero's Fibonacci structure finally give way? Or does it keep doing what it has done for the past 6 months and simply refuse to break? That's really the crux of what these Fibonacci levels are revealing. Monero isn't showing strength because it's rallying hard. It's showing strength because of the stubbornness of its Fibonacci zones, which continue to absorb every attempt to push the market lower. Every downside test has failed. Every rally has stalled at resistance, and the range is, for all intents and purposes, still treading water. If that pattern keeps repeating while the rest of the market stays weak, Monero is providing us with a short-term rally, but from a broader market cycle perspective, it remains relatively weak and vulnerable to the downside. So here's the real question. Can these Fibonacci levels keep absorbing every test lower, or does Monero finally capitulate and make fresh yearly lows? We'll let the Fibonacci levels answer that one. Until then, we're watching the same zones. On the upside, $448.11, and on the downside, the two Fibonacci support zones at $305.41 and $296.88 and $297.14. So, what's your call? Does Monero break resistance or break support? Drop your Monero comments below. Don't forget to subscribe for daily crypto chart analysis where we focus on Fibonacci, market structure, and price action instead of hype. And we also produce a daily crypto trading newsletter, which is just a 5-minute read. Thanks for watching, and we'll see you in tomorrow's crypto analysis.